Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a continuation of the upside move that kicked off yesterday afternoon. So the overnight session has been bullish so far. Heading into the open, we have pre-market support at 77.75 to 78.75 and initial support at 74.5 to 76.75. Now both of these areas are actually fairly aggressive support, so they're only going to work if we are continuing to see broad market strength and some bullish signs in real time as well. So if off the open we are starting to see some bearish signals come into the market, then it makes sense to be cautious even at initial support, because this is not really conservative location. That location only works as long as we're seeing continued upside momentum and continued broad market strength. And simply a lack of strength up here at 81.5 to 82.5 could result in a pullback to initial support. And then if you break initial support, then that could result in at least some short-term liquidation from anyone who bought in the overnight session, and that would bring the 67 to 69.5 zone into play. And then the major support is going to be at 62 to 64. So bigger picture, we want to see ES holding 62 to 64, but short term, if this overnight bullishness is going to continue, then we'd like to see ES holding above initial support 74.5 to 76.75, and if the market is truly strong, then there's even a chance that it could hold above the most aggressive area of support, which is 77.75 to 78.75. On the upside, a breakout above 81.5 to 82.5 would be a confirmation of the overnight bullishness, and that would bring 85.75 and 87 into play. And then the first area of significant resistance is at 89 to 91 quarter, and responsive sellers can still be active there on first test. Beyond that, we have resistance at 95 quarter to 97 quarter, and finally the all-time high at 99.5. Now, given the recent failed breakout that we saw in the market, most likely we will get a response around the 89 to 91 quarter zone, and we could even get sellers active as early as 85.75 and 87. On the econ calendar, we have the ISM manufacturing index out at 9 a.m. Central Time and the oil number at 9:30, and then the main catalyst on the day is going to be the FOMC announcement. Now, typically on FOMC days, the morning session can be quiet, so there may not be too much opportunity in the morning session. And following the FOMC report, as long as the report is in line with expectations, there still may not be a lot of activity or any big moves right after FOMC. But if the Fed unexpectedly hikes rates, then we could see a response in the market. So, today still makes sense to continue to be fairly conservative here. Our short-term bias continues to be neutral. The overnight bias is bullish. So, we know that as long as we're not seeing any warning signs up here, by default, we can give edge to the buy side. But overall, we are still technically balancing within a range, and we are hitting resistance. The other markets are at resistance as well. If you're watching TF, keep an eye on the 1369 to 1370 area. That is the major high volume node in the Russell. So if we can get a breakout and a continuation move in TF, then that would support some continued upside in the S&P as well. So by default, we are going to give more edge to the buyers, but at the same time, understand that we are still technically range bound, and in order to break out and continue going higher above 81.5 to 82.5, we have to see that continued broad market strength. We need to see continuation higher in the Russell, and simply a lack of strength can be enough of a reason for sell side to step in. So that means that we don't necessarily need to see clear-cut weakness for the sellers to be fairly aggressive and active here. If we're simply not seeing enough strength, that can just stall the upside, and the market can quite easily pull back to 74.5 to 76.75, which, like I said, is still actually a fairly aggressive area of support, and it only holds as long as we're not seeing any intraday weakness or real-time weakness. And if that area breaks, then we could get at least some short-term liquidation into 67 to 69.5. That is still an area where buyers can be active, and then 62 to 64 is fairly significant. And if that area breaks, then we could be looking at a shift in the larger time frame bias as well. So those are the main thoughts heading into the open. Let's see if the buy side can maintain the control that we've seen since yesterday afternoon and the overnight session, and we'll take it from there.